Okay, welcome back, and our technical experts are with us. Ashwini Gujral, Mitesh Thakkar and Prakash Gaba. Good morning to all of you. Well, Ashwini, let's start with you. Yesterday was quite a bit of brutal selling. You think this is a buy on dips strategy today?
Well, good morning, and I don't think this is buy on dip, and if you get this 40-point rally, my sense would be that once this early morning gap up is over, we should head down. Given the way mid caps have fallen yesterday, I think fairly strong selling is on way, and the stop is fairly close by on the Nifty. So 11,660 is a nice looking stop, and if you open at 11,640, you hardly have a 20-point risk. And basically, global cues haven't really taken our markets higher, so that way you should expect that more selling should happen. So even on Bank Nifty, if you get your 150-point gap up, it'll be difficult for even banks to move higher. Even yesterday, even post expiry or during expiry, we could not move higher. So that way, we'll have to see the equilibrium or the stop zone will be very close in the morning. And if the first 15 minutes pass off without any sell-off, then we'll have to review. But otherwise, it seems like we should move on the downside.
Okay, well, that was the indication that you got yesterday as well. When that sell-off came in, it was quite ferocious in the last half an hour of trade. The mid-caps were down almost 300 points, the index that is. Mitesh Thakkar and Prakash Gaba are also with us. Mitesh, hi, good morning. Do you get a sense that this uptrend could resume at any point, or given the kind of sell-off we saw yesterday, the uptrend is ruled out for now?
Good morning. So we've been actually maintaining some kind of a bearish view, saying that the first leg of decline was over from 11,980 to about 11,460 move. And then we are basically in a choppy sideways range, not expecting the markets to get past 11,680, 700. So I think that has held. My belief is that this range still remains, so the idea should be to sell closer to the upper end of the range, and I still believe that eventually we will break below 11,450 and head towards lower levels of most likely 11,280 or 11,150. Given that kind of a medium-term view, the idea is that try to sell as close to 11,650 as possible and keep a stop just above 11,700 or 710.
Okay, so that's two of you waiting for the market to rise to sell and not really waiting for the dip to buy. What about you, Prakash? Good morning.
Good morning to you. Well, I think if you remember on Wednesday we said the up move is a suspect. There was not, because the up move was a reactive up move. It's gone up to come down. Well, Bank Nifty was not supporting. It was more of a sideways move. It was not giving that strength out there. To my mind, I think it's a weak market out there. We have gone up to come down. The recent low that we have seen is around 11,400 zones. Looks like that is under suspect. 460 zones. I think that is under suspect. Could be tested again. Similar is the case with Bank Nifty. I think Bank Nifty is coming down to levels closer to around 30,006, maybe around 30,000 zones. That's the level I'm looking at. To me, it's weak. The first level of the Nifty is around 11,504, then maybe around 11,373. I think rallies ought to be sold into. Now, if it goes up, I'll go without it.
Okay, well, let's get some stock ideas out of the way, because yesterday there was quite a bit of delivery-based selling in many of the banking names, whether it's ICICI Bank, SBI, or even Yes Bank. Ashwini, good morning. What would your top stock ideas be today?
Well, good morning. PSUs are facing a huge sell-off. So every day, this ETF news is out there. So more or less, they are the ones which are leading the market lower. Banks will come down, but like yesterday we saw, 2 or 3 private banks will tend to hold up the market. So Coal India is a sell with a stop of 225, target of 210. BEL is a sell with a stop of 100, target of 90. Maruti continues to break down. That's a sell with a stop of 59.20, target of 5,800. Dabur is a buy with a stop of 424, target of 436. And Apollo Hospital is a buy with a stop of 1370, target of 1420.
Okay, so more sells than buys, as your overall strategy also indicated. Mitesh, how are your buys and sells stacked up?
So on stock side, I have two buys and two sells. MCX has had a good price and volume breakout. That's a buy with a stop at 859 for targets of 900. And United Spirits also, the indicator setup and chart structure is slightly positive. So that's a buy with a stop at 593 for targets of 618. On the sell side, Eicher Motors, fresh indicators crossing on the downside. So can be sold with a stop at 18,850 for targets of 17,600. While ICICI Bank, I think Sonia was just mentioning that, is broken an important level of 420, so could see some more profit booking. Sell with a stop at 424, look for a 405 kind of a first target.
All right, Prakash, what about you? What would your stock ideas be?
I have one buy, Sonia. Looks like Wipro could go up. It's a setup buy in a down move, so I'm playing a reaction out here. Target on the upside on Wipro is around 280, stop below 267. Looks weak is Canara Bank. Possibly we'll see a down move to maybe around 260 zones, stop about 273. And Federal Bank also is looking weak. Possible target on the downside is 96, stop about 101. I have a sell on Idea as well. I think it's breaking 10. My target is 10, but I think it's breaking 10. It's going below it. Stop about 12. So all rallies should be sold in Idea. It's a weak structure completely.
Okay. Well, I want to dwell a little more on, you said Canara Bank, and that's what got me interested. Yesterday, we saw some seminal selling even in a stock like Bank of Baroda. Any thoughts, Prakash, Bank of Baroda? It's not as weak as Canara?
Bank of Baroda. Well, I would say that it doesn't look that weak, but I think the weakness would come up now. I think it possibly we'll see 110, 112 zones. Looks like it should increase now. I would have a stop somewhere closer to 124 in straight short. If you get rallies, short it. To me, the structure is weak. It's a matter of time it goes down.
And this is a moot question because it so much depends on fundamentals. But I still wanted to know, Mitesh, Yes Bank?
Lata, I think the stock is extremely oversold, but what I can tell you is that the stock hasn't yet bottomed out. So there could be 80, 75 levels coming where the stock could stabilize. Difficult to work out target because it's extremely oversold, but as of now, I think avoid from buying, wait for the stock to make some reversal pattern or signals which might be a few weeks away.
Okay, well, we'll come back to you guys in just a bit. For now, let's move on to some other big stories. An important meeting to monitor today will be the Reserve Bank of India expecting to hold a pre-policy meeting with the chiefs of all public sector banks. Ritu Singh, my colleague, joins in to tell us what you can expect from this important meeting. Hi, Ritu.
That's right. We understand that the heads of various public sector banks will be meeting with the Reserve Bank of India governor today. And this is a pre-policy meeting, and this is the first in the series where the governor will also be meeting with the heads of private sector banks and economists before the Monetary Policy Committee meets to decide on the repo rates in the first week of August. We're given to understand that so far banks have not been given a specific agenda, but among various other things that could be brought up during the discussion is some of the budgetary proposals, including, the relaxation given to banks for buying out NBFC's pooled portfolios. We will wait to hear what comes out of that meeting this morning, and we'll keep you posted.
This meeting and these meetings in RBI are codenamed AKNP-DDB.
Okay, what does that mean?
Allah ke naam pe de de baba. Usually people come and ask for this, that and the other. So they are called AKNP-DDB. I mean, obviously it's some younger person in RBI taking a pot shot at those who come to meet and ask for favors. Okay, let's shift focus from Mint Street to North Block. Yesterday, the government has detailed, actually for the first time, its off-budgetary borrowings for the first time in the budget itself. As per this plan, public sector companies will borrow almost 1.5 lakh crore of rupees on behalf of the government till the end of FY20. I mean, these are government borrowings. The interest is paid by the government, but they're pushing it in the PSU bank so that it doesn't color the fiscal deficit, an unhealthy practice. But Sapna has more on this news. Sapna, tell us.
Well, it is noteworthy that for the first time in this budget, the government has brought out a full statement on the extra budgetary resources, which is nothing but, off-budget borrowings by the government, which are done through the PSUs. And most of this money is being deployed on social sector expenditure. For example, all your flagship programs like the Swachh Bharat, like the Saubhagya scheme, like the Pradhan Mantri Awas Yojana Urban. For example, HUDCO on the part of the government will go and raise bonds worth 20,000 crores, and these bonds are fully serviced. So basically the interest in the principal part will be paid by the government, except that it's not part of your fiscal deficit calculation. But from this year onwards, the government has made up its mind to show it as part of the central government's debt, which is a pretty significant move on that front. If you look at the numbers, well, over the last 2 to 3 years, the numbers have really moved up. 1.45 lakh crores is the estimate by the end of FY20 in terms of these off-budget borrowings through PSUs. But there's also an important takeaway here. The government is planning to reduce this debt stock through EBR to zero over the next 5 years. Now, how will that be possible? We'll have to watch out over the next 1 or 2 years. But the fact remains that this big number of 1.45 lakh crore projection by end of FY20 is not part of the government's fiscal deficit targets.
Thanks a lot for that, Sapna. It's not very difficult for the government to take over 1.5 lakh crore of debt. Anyway, they are servicing the principal. So, they'll have to make cuts elsewhere and put this on the budget. But what the government is still not telling us is several other expenses also that are done through other public sector companies. For instance, FCI. The Food Corporation of India has run up from, a debt of about 30,000-40,000 crores 4-5 years ago to 1.96 lakh crore last year. Basically, food subsidies that have not been paid off. So this extra budgetary borrowing statement is still an understatement. The fiscal deficit actually is higher than even when you add the EBR.
Okay, so more fiscal problems there. But let's take a short break on that note. We have about half an hour before the pre-opening rates kick in. Hatsun Agro reported a very strong quarter. R.G. Chandramogan, the chairman and managing director, joins in next to detail the fine print. Also, we will focus on the earnings expectations from big boy Reliance. Prayesh Jain of Yes Securities will be with us. Stay tuned.
Birds trust their wings.